So we are very pleased to invite Tendorai, who is from Old Mutual and will be presenting on how to become funding ready. And we know that that is something very, very important to us as business owners. So Tendorai, I think if I can ask you to switch camera on. There you are. Lovely to meet you. This was our first interaction. I've seen his slides. You are in for a real treat, so please enjoy. And again, thank you to our panelists. And over to, it's definitely not last but not least, we're going to round off on a high on the session. So Tendorai, over to you.
Thank you very much. So thank you, Debbie, and morning to everyone. I hope I'm audible and you can hear me clearly. If you can't, just do let me know and I'll see what I can do. Thank you so much, Alet, for that. So today I'll be taking you through the masterclass for how to get funding ready. Pretty much it's going to focus on some of the lessons we've learned, especially on our journey as Old Mutual SME. And I think a big component, because I tried to split it into two. The first part is just introducing the audience to what Old Mutual is trying to do with SMEs, especially within the space of funding. And then secondly, drill down on our lessons learned based on some of the key items we've observed when SMEs have been applying for funding. I think as Debbie has indicated, my name is Tondra Kariwo, and I am the solution owner for funding within the Old Mutual SME space. I have shared my, can everyone see my slide?
Thanks, Tendorai. Loud and clear.
Perfect. So Old Mutual 3 years ago, within the corporate division of the SME, embarked on a journey to actually understand the SME better. Key to this was ensuring we could play a pivotal role in how our SMEs contribute towards the economy, and particularly in alleviating some of those levers that we're currently plagued with of a low economy, low economic growth, high unemployment. So these were all the things that we're trying to understand better with the view of putting in place and working alongside SMEs to see how they can actually contribute and bolster the economy. So Old Mutual pretty much embarked on a journey to understand the SME space. In totality, we identified that there are in excess of 2 million SMEs today. 30% of those SMEs sit within the formal sector, which means they are registered, they are trading, they've got an annual revenue of 500,000 and above. They've got established businesses, they've got established processes, and they're also active within the funding realm. I think a lot of my colleagues previously were talking to what are some of the key things we want our organizations to look at, and those were some of them. 70% of the entities, or let's maybe say 60%, sit within the informal sector, which means that some of them are registered, and some would not be registered. Some of them are trading, some of them are not actively trading. Most of them are looking for some form of grant funding, startup funding. They're looking for access to clientele, etc. They're still trying to build out their processes, and they're trying to establish how they operate and become ongoing concerns. So on the back of this specific insights and research, what we identified were 4 key challenges most SMEs that are on the growth trajectory often encounter. And those 4 specific challenges were access to market, which is the ability to get a willing buyer, willing seller collaboration, access to funding, which means based on the state of the business and where the business is going, how do they get funding that can actually assist them to grow and run their business? Business operations. So a lot of the guys are either paper-based or manual. More importantly, how do you get access to technology that can ultimately assist and leverage how you can leverage that in running your business. And then business assurance. When you've now established your business and it's running, how do you insure your business so that you can always protect the assets that are producing revenue for you? Within SME Go, which is a part of the Old Mutual SME business, our value proposition to the market is a one-stop solution that caters for all four of these things. And it does this in a way where SMEs can be professional, it can assist and allow for the administration while leveraging a vast majority of capability and features. What are some of the key standout platform features that we've tried to bring to the market? We've tried to introduce smart invoicing to allow for better administration, to also allow for payments. We've also got features that allow for tap on go, which means that if your business is running from your mobile device, your tablet, or your laptop, you're able to connect all of these things so that you can pretty much use your business on the go. We've streamlined the order to sales process, which means you can pretty much go onto the platform. Our alternative funders. We've partnered with a myriad of funders that provide access to 8 different types of funding products. And all of these funding products that we brought to market are in line with some of the challenges we're seeing our SMEs are facing and what they need in order to be able to overcome those specific market challenges. And then access to markets. This is our platform where buyers and sellers congregate so as to be able to provide goods and be matched up with buyers who are prepared and willing to take up those goods. And the nice thing around our platform is that it's vetted. We've got both enterprise, large corporates, as well as your small enterprises, all participating and moving in a direction whereby this congregation happens. And as I said, it pretty much stands within the hallmarks of what has been indicated around how big corporates are trying to assist SMEs, especially on this journey that they do face. And by the way, in terms of questions, I will address questions towards the end. Debbie will assist me with questions, and then I'll start to address those. I think for now, I'm just going to cover the slides just so that we can get to the heart of the masterclass. How does the SME Go platform itself works? It's subscription-based, which means that we offer specific plans, and those plans have been designed, one, for customers to be able to get a feel for the platform, which means we've got a free version, which gives you access to the platform, access to features, access to services. And then if you know that your consumption is a little bit more, as well as your needs are a little bit more than what the free version gives you, we've got our premium version, which allows you to get even more access to specific features, even more capability, and that allows you to expand and do more. And if you're a high user, you can pretty much move to the Premium Plus. And as indicated, the platform is designed to provide you with access to markets, access to funding, business operations, as well as assurance as well. So what does flexible funding mean for us at Old Mutual? What we've tried to do is come up with a customer journey map, which takes our customers down a funding journey where you get access to different types of funding. All of this is done via a digital platform. It is primarily tailored to small business funding, but we do have augmented solutions that are for your bigger customers, especially in the case of supply chain finance, as well as our trade and asset finance. And most of our package solutions are tailored for those specific needs that as a customer you'll be looking to fulfill. What type of funding solutions do we provide? At Old Mutual, we are proud to indicate that we do contract finance. So let's just say typically you've got a project that you've been provided and you need funding for that in order to fulfill it. We can pretty much provide for that. We do purchase order finance, both from a government perspective as well as from a private perspective, where you are in receipt of a purchase order and you need to potentially use that to unlock funding. Early invoice payments. So let's just say you're a big operator, a lot of your cash flow stuck in your invoicing. We can pretty much provide a debt factoring service. Personal loans. What we've also seen with a lot of our entities is that a lot of our customers don't qualify for funding because they're not yet ready for it, which is what I'm going to be unpacking. And due to the fact that they're not ready for funding, they can't actually qualify for business funding. So an alternative to business funding is generally personal loan, where you can pretty much take out a personal loan to kickstart some of your operations, to kickstart your capital acquisition, put in place your operations, and be able to start getting some form of trading history. And as you're building up your trading history, it then starts to unlock some of the other business funding that's available. Asset and trade finance are security-backed finance, whereby you're looking to procure asset, or you're trying to do some form of trade, be it locally or internationally, and you need funding to be able to fulfill those specific operations. And then our most common type of funding is your business term loan. Your business term loan is basically an unsecured or secured facility, and it pretty much is driven by the nature of the engagement. Nature of the engagement being, if it's unsecured, you're looking for early access or quick access to funding based on the fact that you're ready to apply for funding. If it's secured, you're saying you're looking for a high value facility because what you're trying to obtain is a lot more than the parameters that your unsecured lending would provide. So generally, within your business term loan, unsecured lending would be anything from 2 to 5 million, whereas secured would be anything from 5 million up to 50 million. And what I've put here is all illustrative, and it gives you sort of a rough guide as to how some of these products work from a high level. So what are some of the common aspects we start to witness as customers prepare to get ready for funding? And we've taken this pretty much from a historical basis of what we have observed, and more importantly, the differences between a successful applicant versus an applicant that still needs to put in more time. So from a customer perspective, understanding the business need is important. The whole reason why I started off by indicating that 30% are formal sector SMEs versus 60% that are informal. What we're seeing is that the guys who sit within the informal sector are looking for funding. They're not quite clear as to what the funding requirements or needs are, and they apply for funding based on the fact that they're just trying to get the business going, which I think sort of alludes to how we ended off the panel discussion, because the panel discussion was concentrating on know your niche, understand your area of expertise, and concentrate on driving that out and generating the revenues that are associated with it. The same would apply to understanding your business need. If your niche is the supply of produce, and you know that you've got 3 or 4 suppliers that you need to ensure you're constantly providing this produce for, your business need may be delivery vehicle or delivery vehicles to assist in ensuring that that supply is consistently met. So your business needs become specific to how you're continuously driving your revenue. Understand the funding requirements, once again, because a lot of funding platforms have got a myriad of funding solutions. You will find that a customer or client will come onto the platform and they'll apply for 3, 4 different types of funding solutions, right? Which once again detracts from the business need, because if your business need is clear, i.e. you need transportation in order to deliver produce, the funding solution that you must be looking for is asset finance or a facility that can buy an asset that will continue to deliver the requirements, to deliver the produce. And the requirements that need to be provided for that would be What is the type of asset you're looking for? How much does it cost? How are you understanding of how you're going to repay that specific asset? And more importantly, what is your current trading history looking like that supports your application? Explore your funding sources. I think one of the nice things we are witnessing in today's world is that your funding sources have become many. I think long gone are the days whereby one would traditionally go to a bank to apply for funding. I think what we're seeing is that the banks still are a very dominant player in terms of funding because most people still associate funding with the banks, but there is also quite a lot of alternative funding, government funding and incentive schemes, and other forms of funders who are available who can actually assist within this regard. So it's always important that at the outset of trying to determine what you need, to just go and actually understand what is available and how can you capitalize based on your readiness to pretty much apply for that specific funding. And then more importantly, documentation. Your application is only as solid as the supporting documentation you put together. So this is where we want to see compliant information, registration to the CIPC, your SARS credentials, bank statements, your annual financial records, be it management accounts or financial statements. And if the funding request is specific, any supporting documentation in terms of purchase orders, asset invoices, etc., because these are all things that are just making sure your application is solid enough to go through a smoother and easier process as you're going through the funding requests. Risk factors. I think what we also are seeing, especially given what we've experienced over the last year into this year from a South African perspective, a lot of our clients don't take into consideration the risk factors. And sometimes it's a combination of factors. It's either you're aware of the inherent risks or you're not aware. And I think as we've noticed with a lot of customers, they normally go through this within an experiential phase, as in trial and error, and what you get right, you learn from, and what you get wrong, you pretty much pay and suffer the consequences of. So understanding the inherent risk factors involved within funding is key. So from a market perspective, what are we saying? Understand the market conditions. Right now, the South African economy is currently going through a low economic growth. Interest rates they're quite high right now for a lot of people. From a investment perspective, not a lot of institutions are investing unless they've got a guaranteed view of where that specific investment is going to come out. So understanding all of these variables becomes key to knowing the right time to apply. Financial risk. Financial risk is talking to how much appetite, or in terms of how much funding you can get, how much can you actually take? How comfortable is your business to be able to pay back that specific funding if the parameters, i.e. the interest rates, were to change? And more importantly, if there are factors that have not been foreseen within the time of application, how will you be able to weather that specific storm? From an operational perspective, is your business stable enough to weather that period within which you're taking the funding? Do you have a team strong enough to be able to deliver the specific services that you're taking the funding out for? And more importantly, have you also created any mitigations and continuation plans in the event there were specific hurdles that were encountered during that period of the funding uptake? And then from a legal perspective, your funding application is pretty much a legal agreement that says you're taking out this money because you are able to provide X, you're able to provide these guarantees, these covenants, you're putting some form of security, or in the event you're unable to pay, the bank or whoever it is you're taking the funding from has got some form of recourse against you. So being able to understand the extreme nature of those requests becomes also vital, because what you don't want to be in is a scenario whereby your house has been put down as collateral for a funding type that you're taking out to run your business, and then you fail to pay that back, because it has direct implications on your livelihood in the event things were not to be positive. So just understanding the legalities and the risks associated with those risks becomes key. And then get into the fun part. You've done your homework, so you know why you need the funding. You wanted to get your asset in order to continuously provide your produce. You've done you know what the requirements are. You've got your documentation. You've also explored all the alternative options, and you've factored in your risks. So where would you start from in terms of preparing for funding? The first aspect is just to research your funding options. Make sure that this is aligned with your business need. Your business funding proposal would be an internal document that you would also use for your interactions with the funders. Put together a proposal which pretty much covers what your business does, what you're looking for the funding, how you're proposing to actually apply that funding, your thinking around your financial projections in terms of how do you intend to repay that funding, and more importantly, what the key outcome or objective is by effectively taking on that funding. From a financial projections, over and above understanding what the funding will be required, you also want to make sure what does that mean to your monthly income and your monthly income statement, your annual projections, just so that you know that you've factored into equation how you're going to manage the funding requests. And then from a documentation perspective, is just making sure you've got a checklist that has pretty much covered all the necessary documents you would need to provide for. What are some of the common pitfalls, mistakes to avoid? What we see coming through quite occasionally, and the whole reason why I gave the formal and informal perspective, especially with a lot of our clients from your non-established or your SMEs that are still trying to create a form and they're looking for funding, the information that we get is sometimes misaligned from what they're looking for. So there's no track record of the business. There's inconsistent documentation to what has been supplied by the borrower. If you're looking at invoice discounting purchase orders and we're looking at your debtors and creditors, sometimes these are also incoherent with the type of funding solution that is coming through. And these all become key, right? Because your information as the borrower must tie back to the documentation that you provide. Lack of supporting documents. So sometimes when applications take too long, it's because the client has not effectively put together all the documents that are required. And those documents are usually quite clear from the onset. So they want to see your bank statements. They want to see your company registration document. They want to see your SARS information. They want to see the annual financial statements. They also want to see any supporting documentation if the type of funding is outside of your term loan. So all of this information must be supplied, it must be complete, and it must be for the duration that is being requested for purposes of evaluation, because a lot of this goes into the screening on how to pre-approve or approve or decline your application. And with most institutions, right, the moment certain information is incomplete or incoherent or inconsistent, it pretty much leads to an immediate decline, and most funders will move on to the next application. And then from a business case perspective, which also talks to your financials, your inability to produce clean financials, i.e. financials that support your application, your inability to understand your credit score and your credit rating, also very key. I think what we're seeing a lot of our customers do is they apply, but they actually apply without understanding what the credit rating looks like. And the credit rating is usually something that is the starting point of any application. So your credit rating is a series of scores that ultimately determine the level of risk the funding institution is prepared to take. The higher the risk, the higher the probability of decline. The lower the risk, the higher the amount of funding you're likely to get. So one of the things we encourage all our customers is be vigilant and aware of your credit rating and how to improve or ensure your credit rating is solid enough to undertake the funding exercise. No collateral. You're applying for asset finance, you're applying for trade finance, you're applying for a business term loan and it's secured. However, you don't have any collateral. Banks will not approve that specific facility. And then when it comes to interest rates, we also tend to find, because of the difference in types of entities, if the entity or the client is still maturing, they're typically offered high interest rates. Those high interest rates come at a high cost, and this has not been factored into the financials. So what you're ultimately doing is you're taking up funding, which is a lot more expensive than the actual return you're going to get from the funding needs that you need. So it's always very important to understand the terms of the agreement at the point where you're now taking up the funding, because you do want to take on funding that you know you can be able to benefit from, but its cost does not actually impact your profitability and your ability to carry on as a going concern. So what are some of the recommendations and or resources that I would advocate to customers, especially as they embark on that journey of exploring which funding makes sense? We will always advocate for you to start with where you've got your best track record. Most people have got good relationships with their banks, so your banks make for a good starting point when it comes to looking for funding. Alternative financing options have become a key player within the market. Old Mutual pretty much sits within this space. And what I would also advocate is be aware of what do all the alternative financing options look like, especially if you're considering some of the 8 funding solutions are highlighted. It's very key that you know what is available, how you can apply for it, and more importantly, how to benefit from it. If you're a startup or you're an entity that is looking for support over and above what you currently carry and have, also explore your government grants and incentive. There are quite a few entities and institutions that are playing within this specific space, and it's always a good starting point to start that learning ability. As you're going up the curve for funding, exploring your venture capital and your private equity, where you've got an equity type of business becomes key, and also looking at your startup funding. If you're still a startup, let's call it a small entity or a micro enterprise in nature. And also tools to be aware of. Look at your loan calculators, speak to the financial advisors. It's vital that you have as much information as possible before you embark on a funding journey. So these are some of the tips that I would like to share, especially as a part of how to prepare and allow yourself to be funding ready at the point where you're looking for funding, and some of the things to be mindful of, especially as you explore and embark on that. All right, and that pretty much brings us to the end of the presentation.
Thank you very much, Tandarai. We do have some questions, so if everyone's okay, we're just going to pose them to you. So from one of our attendees, they asking probably a little bit directly why the criteria is quite onerous. They said they registered and met all criteria, but because of a Vodacom contract I did not take, I was blacklisted. Then they land up going to a Lone Start company. How would one navigate perhaps that maybe that's more of an unusual situation, but how could they navigate something like that? What would your advice be?
Yeah, so I think if I just first start with the point around the onerous requirements,
Yeah,
the when it comes to funding, there is no funder that is prepared and is going to allow to take on risk where they cannot actually see how the money they are investing is going to be repaid. So what you find is that your requirements typically range from the type of risk you're taking out. If it's a low level type risk and a low facility, you'll typically find that the requirements are generally quite flexible, but there needs to be an intent from the person taking out the facility to be able to repay. That's key. I think everybody wants to be able to see the repayment. In
yeah.
terms of what has happened, especially with Vodacom, I think that it says Vodacom, right?
Yeah. So I mean that
Yeah,
we know that that can
yeah.
happen if
So,
your account gets hijacked or something.
correct. That
Yeah,
that is it's very key for that specific individual to make sure they can address that issue,
yeah,
and potentially do it in quite a timeless manner. Because as long as that adverse information exists against their name, it pretty much impacts how they're trying to move on or apply for other things that are dependent on the information that is looked at. And being able to maybe find, typically there are legal individuals and legal institutions that can actually help with addressing adverse information, as well as almost being a go-between to try and mediate how to resolve that. I can't say it's a common issue, but we do have incidents where people are being impacted by adverse information and becomes a cause of concern, especially when you're trying to do something and there is this issue that is sitting on your record.
100%. I presume even from a procurement process that could be dangerous for them. So one of the
Um,
let's just have a look here. Lavuya would like to know, how much do you start funding purchase orders? I suppose at what level do you start funding purchase orders?
Yeah, so purchase orders is one of our more common products. It typically ranges from 250,000 and it goes all the way up to 5-10 million. It all comes down to the nature and size of the engagement. We do look at both government and private, and it will also then come down, as I said, to your track record and what you're able to then qualify for.
Excellent. Okay, I was saying that the app is not downloading, but sometimes that might just be a connectivity problem. So maybe they can keep trying. Otherwise, I'm sure we've also got the help and an email they can contact. And then could you advise on the interest rate for loans? This is from Nombuzwe. And Nombuzwe is also woman projects, businesses, any support. So that is her question.
Yeah. So when it comes to the interest rates differ per product type. And I'm going to give you, I think, a typical case of the business term loan. Your business term loan traditionally would be anything from prime plus one if you're looking at the bank. Okay, so I think maybe if I restart, your interest rates are typically driven by your credit score, your credit rating, because your credit rating effectively informs and drives your consistency against your own financial matters, be it a business. And then at a product level, from a pricing perspective, your business loans typically start from prime plus one, depending on the institution that you are getting it from. When it comes to alternative finders or financiers, your interest rate is usually triggered at prime plus two. But once again, those specific variations would come down to some more lenses, of which one of those would be your ability to pay back your track record in terms of what you paid back, and if you were to take out this specific funding, what that would mean. But it's generally market related and is in
Okay.
line to what is provided on the market.
Excellent. I think that sort of answers Kaya's question, but for you, sir, would like to know, what is your turnaround for PO funding to transfer it to a client's account, and how do your clients pay back the PO funding?
Okay, so in terms of the PO finance, all documentation being equal and in order, it typically takes 3 to 5 days to assess, evaluate, and come back with a decision. So generally, I think the whole reason why I started with the getting funding ready is you don't want to apply for funding when you actually are not ready to put all the documentation. So rather understanding the requirements and then getting your funding underway reduces the turnaround time for decisioning. If approved, it normally is a 48-hour payout, but within PO specific cases, typically the funding will be paid towards that specific, the supplier of the purchase order. What
Yes.
would then happen is that we would then take on the risk of getting that payment from yourself when you then receive the payout. So the payout is never to the individual, it goes to the supplier who would then make that delivery to the end consumer.
Got you. And then from Malefa, how challenging is it to get funding for a freelancers company to fund an establishment of a fast food franchise? And will this be advantage or disadvantages in the funding application? So in the brackets, he says all document for the company are in other, I suppose, names, with the exception of the company being just a year old. I'm not sure if that's enough clarity for the question for you.
Can you just repeat that?
So how challenging is it to get funding for freelancers company, okay, to fund an establishment of a fast food franchise?
Okay, so I'm assuming by freelancer, it's not a going concern, right? It's not a business
I
that's
think
trading,
that's you would
operating.
say, right?
Yeah, yeah. So that will be, I think it comes back to my point around where funders are prepared to take risk, right? The reason why they look for a level of guarantee from the client who's looking for the funding is the intention for repayment is saying that the person who's taking out the funding has got a level of obligation towards repaying the funding. As long as there's no obligation from the person taking out the funding, where the funders are effectively putting their money into the individual, but there's no guarantee of a return. So if you're a freelancer and your track record is very difficult to ascertain, and your documentation also does not tie back to what the requirements are, it is always going to be a challenge to provide that type of funding. However, if you're a freelancer, your revenue types are continuous and consistent, your documentation is in order as per the requirements, I think your opportunity or chance of getting funding is as equal as anyone else who has got a regular trading business. It really comes down to the fulfillment of the requirements.
Got you. And from Sepo, is it advisable to pay more than the stipulated amount on your loan? And does it help reduce the interest at all?
Yeah, so generally it is. So any amount you can pay back quicker or faster does help you, because all you're doing is you're reducing your payback period. And if you do your financial projections up front, what your financial projections allow you to at least understand is the degree to which those lump sums will be a benefit to yourself. So the way you almost got to look at funding is that any money you're repaying back earlier is capital you're taking away from your own availability. And at times that capital may be more important for other resources that you have as an organization. If the capital is surplus and you deem it worthy to pay earlier, then by all means you should do that, just to give yourself some reprieve a lot sooner.
Very good advice. And then we have actually a question from our in-person audience. So from the audience here, they're asking, is there a minimum margin for the order to be considered for purchase order funding?
And is there any more context around margin? Because I think what we have from a requirement
Yeah, actually, so
perspective,
she says
yeah.
it would be great to get a guidance on what the minimum gross profit percentage for the order would be if there's such a requirement. So is there a GP requirement on purchase order?
No,
No.
so purchase order does not have a GP requirement, because the GP is internal to
Your
to the
business.
client. Yeah, that's the money you are making as a part of that transaction. What we have as a requirement for purchase orders, that our purchase orders typically start from 250,000 going up. And then the requirements for that would be more compliance for you to be able to get your application assessed.
Okay, perfect. And Yeah, so we also have one question. So Nombuzo, just to go back to her question, are there any specific support programs where you target women-owned businesses with Old Mutual, Thunderai?
Yes, so we do have the Masisizane Fund. We also
Yes.
have the Old Mutual Enterprise Supply Development, and we also have got Old Mutual BDT, which is the Build Trust Fund. And all of these have got a high propensity of encouraging women and Black-owned businesses to progress. It is at the forefront, I think, of a big part of the contribution towards how we uplift our local industries, our local manufacturers, and also our township economies. I think what typically happens is that based on the criteria, there's certain facilities that are more advantageous than your traditional type funding solution. So there are facilities that are in place for that specific need.
Fantastic. And yes, everyone, we will be sharing the presentation. We will be sharing contact details from Old Mutual and team. Thunderai, thank you so much for taking the time, demystifying. I think just by the fact of the amount of questions we received, it just shows that this is very much needed. And I want to just thank all our partners today. Old Mutual are available and part of a lot of the other initiatives that Smart Procurement's involved in. We had your Mzansi Fund last year at the Indaba in Johannesburg. I encourage all those online, if you haven't considered how to be part of September's sizable event, you know that really is the largest market access event within South Africa. It has been for the last 12 years. I think personally very excited as well that this will be coming back out of COVID, which was a lesson for all of us, but allowed us to grow in platforms like this, that we are very pleased to be back in the full exhibition on our ESD platforms. So partners like Old Mutual are involved as well. And more importantly as well, just opening up to our visitors again. So those of you who remember us from 2019 and before, 3,500 people coming across. But I encourage you, if you're not being hosted by a corporate, or if you want to self-fund, we always allow that as well. Please make sure you're there, because we are very, very excited to be back in absolute full steam. Not that it wasn't too big last year, the last 2 years, but we also appreciate that now is the time. I think a lot of our business owners are ready also to take the time to be exhibiting and back to interacting. Again, once a big thank you to City of Cape Town for just sharing the vision of market access and a platform like this, to Alderman Voss for the leadership in allowing this to happen. And please keep an eye out. As you know, this is an annual program, so the invitation to apply will go out probably in the next couple of months, and make sure that you are part of this. And if anything came out strong in that panel, it's about your network. And this is how we provide it through programs like this. Thank you very much, everyone. Stay well, stay warm, stay dry wherever you are. And we look forward to hopefully seeing you in person as well as our many initiatives for the rest of the year. And stay well. Bye. Thank you, Thunderai.
Bye now.